All right, hey, what's going on? This is Dan Keller, your mortgage advisor at New American Funding. I want to welcome you to another episode of Making Sense in the Markets. Today is Saturday, June 10th, casual Saturday, actually 6:15 in the morning, and I'm coming to you from my backyard, the Keller farmhouse. Lots of good information to share with you today, and so I want you to stick with me. This is, and I don't mean to scare you with any of this information, so bear with me, okay? If you followed me over the last few months, you've heard me talk about this 103 mark in regards to mortgage bonds. Over the last few months, it's a mark that we wanted to get to. Now it's a mark that we want to stay above. What that represents is government 30-year fixed rates in the upper threes and conventional 30-year fixed rates in the low fours. And we're flirting with that line. I think we're in a healthy trading range right now. Now that we've reached that, and then in addition to some economic news, I think we're going to be okay in this trading range for at least the next 30 days or so. What that means, let's go back to this. I want to take a second. If you thought about refinancing, or if you know somebody who's thought or talked about refinancing, you may have missed the time where rates went up over the last year. I believe, and I'm not saying this to pressure you, I believe this is one of your last opportunities to cash in on low interest rates. We've reached a 2017 low, and this is a great opportunity. So I'd like you to share this information with somebody that you know. If you have an interest rate over 4.25%, or if you're paying private mortgage insurance, or if you purchased over the last 3 to 5 years and you think you've got some equity, now might be a time to take a 30-year to a 15. Now might be a time to take some money out and pay off some high interest credit card debt. It's a good time to evaluate your mortgage. I want to throw that out there for you, okay? The next thing I want to talk about right now, and this, I do not want this to scare you, but you need to know this. China is now showing an inverted yield curve. I'm not going to explain that because it's complicated, but I'm going to explain what that means. That means China is heading into, not toward, into a recession. China is one of the big powerhouses economically in the world. That's not good news. There's negative news, financial news coming out of Europe. Our markets are not doing great. Our stock markets have been on a run. At some point, it's going to cool down. I believe we're heading into a recession at the end of the summer, early fall. Again, not a housing market issue, but a financial recession. What I want to share with you is how to prepare for that and how to take advantage of that. So what I'm going to be doing all summer long into the fall is I'm going to be hosting a monthly new homeowner budget class. I think this is super important. The way that I look at this, you guys, is I put you into debt. It's my job to help get you out of debt. And so I'm going to be teaching you kind of the same exact budget form, monthly budget form that my wife and I use. It's the same form that I've been coached on for the past 3 years. It's changed my life financially. I want to teach it to you. I want to show you how you use this. It's something that if you are building a small family, or if you have a family, you can teach to your kids. It's incredible. So I'm going to go over that, and I'm going to teach you that and share that with you. You know, I talked about this over the past couple of weeks. 55% of Americans worry about money. 80%, get this, 80% of Americans right now are in debt. I follow a guy online. You've heard of him, Dave Ramsey. I don't necessarily agree with everything Dave says. As it relates to budgeting and paying off debt, I do. I agree with a lot of what he says. And he talks about a budget is telling your money where to go instead of wondering where it went. And it's spot on. So what we're going to do at this class is I'm going to teach you how to create a monthly budget. I'm going to teach you how to stick to that budget, okay? Not overspend. Sticking to it is key. How to pay off debt, which debt to pay off, how to save up for an emergency fund, or what I call a float account, and then how to improve your credit scores. And each one of these, obviously, there's going to be additional questions that are going to come up. I'm here to answer those. I'm going to have my financial planner there. So I look forward to seeing you at the next homeowner budget class that I have. If you have any questions in the meantime, reach out to me. I'm going to upload this also to my blog. Somewhere around this video or this email will be an RSVP link for that budget class. I'm going to go enjoy a great weekend. It's so beautiful out. I hope you have an incredible weekend. Share this information, comment, reply to me. I'm getting a ton of feedback, a ton of replies when I send this out to my clients. I'd love to hear from you, okay? Have a great weekend. Take care.